Before we begin, just a couple of housekeeping announcements. Please keep yourself on mute throughout the program. We'd love to see you. It does really make for a better program. So if you don't mind, please turn on your camera so we can see you. And if you have questions for our presenters today, Chichi and Caryn, you can either put them into the chat. And if you scroll down to the bottom of your screen, there's a floating toolbar and there's a chat box. And if you click on chat, you can put your question in there, or you can raise your virtual hand. And to do that, you also need to go to that virtual, the rolling toolbar. And under reactions, you can raise your hand. So I just raised my hand and you can just see what it looks like. Hi, Ann. Ann's here. It's my pleasure to introduce our presenters today. They are also the co-chairs of the commercial committee of BCAR. We have Caryn Black, and she's been in real estate for 18 years, serving Bucks and Main Line mostly. She does hotel and hospitality establishments, and she works at Kerfis Sotheby's. Caryn, you can add anything if you like. I know we just did this very quick this morning.
Yeah, no problem. Nice to see everybody in Philadelphia too. Just wanted to.
And Philadelphia, okay. And then we have Chichi Ahia. Did I say that? And
Ahia.
Chichi Ahia. Okay, yes. Told you I'm very bad with names. He is the executive director, principal, and broker of record of SVN Ahia Commercial Real Estate, primarily serving the markets of Eastern Pennsylvania and Central through Southern New Jersey. He is a licensed real estate broker in 6 states, and he's been honored by Philadelphia Magazine as one of the top real estate brokers in the suburban Philadelphia market. And we're thrilled to have both of them here with us today. And I'm going to mute out so you guys can start. Thanks. You know what? Actually, Siobhan and Christy Mineta have something quick to say. Sorry about that.
Sure. Christy, are you available?
Hi.
Oh, there
Hello,
she
there
is.
I am.
Hey, Christy.
Hey guys, how's everybody?
Good. How are you?
Good. So I'm sorry I don't have a script together, but Siobhan just said she wanted me to plug the real estate, sorry, multitasking over here. The podcast that I'm doing with BCAR. And it is called Killing It in Real Estate. And it is coming out as of next Tuesday, every other Tuesday. It is meant to be educational. It's meant to be fun. But it's really just meant to help you guys learn about what BCAR has to offer and what BCREI has to offer and all of the different tools that we have surrounding us. So stay tuned. I hope that you guys will tune in because we're trying to figure out how to get you guys involved in the podcast. So it's not just me and guests talking, but actual realtors and agents in our area. So hopefully you will tune in and enjoy it.
Yep, we put a link in the chat for everyone, and you can just watch out. It'll be released on Tuesday morning at, I think it's like 5 a.m. release, but you'll see the next episode.
Yeah, so I do expect everybody to be tuning in by 5:01.
Exactly.
Thanks, guys.
Thanks, Christy. All right, Chichi and Caryn, if you're ready, we're ready. Thanks.
We're ready to go. Can you guys hear me okay?
Yep.
Yes.
Okay. I'll apologize to everybody up front. I'm traveling at the moment and I've got really poor hotel Wi-Fi. So I'm going to do my best here to get through this. Thank you, Lisa, for the introduction. Christy, good to see you. And we'll jump right in here.
Good to see you too, Chichi.
Thanks. And Caryn, unless you have anything to add before we get going.
No, all good, honey. Yeah, all good.
Okay. All right. So this is our commercial real estate update and forecast. And I've got 2 screens going here because of the Wi-Fi situation. So hopefully the slides are tracking. Did that just change or no?
It's just your first slide, Q1. Now it's the
Second.
picture of the 2 of you. Okay.
Alrighty, and Chichi, he is, Lisa mentioned, and Caryn Black were the co-chairs of the BCAR Commercial Committee. This is hopefully the first of many post-COVID attempts to kind of get re-engaged here. And we thought it would make sense to start out by just giving you a quick update as far as what we are seeing in the commercial real estate market. And like any good presentation, we're going to start out with a disclaimer. And the disclaimer is, we are not economists. I am not an economist. Caryn is not an economist. And I throw that out there specifically because I know a lot of times there might be a temptation to take some of these notes and go to a listing presentation and present some of the facts to a property owner. And what we'll share with you comes from a variety of sources. So take them as you will, use them as you may, but certainly feel free to verify any of the facts as you progress. So first and foremost, just to address the elephant in the room, as you'll probably get from the image there. When Caryn and I started preparing for this, we were not at war. Russia had not invaded Ukraine. And first and foremost, I'll just say, our hearts definitely go out to the people of Ukraine. I was watching this morning on the news, and I saw a grandmother and a grandchild attempting to cross the border into Poland. And I pictured my own grandmother and my own kids in the same situation. I really can't imagine it. So our hearts go out to all the people affected by what's going on there. So kind of just scrambling. Can you still hear me okay, by the way?
Yes.
Okay, good. I turned off my sound because I've got an echo going.
Yep.
So just kind of scrambling. Caryn and I went back and tried to just quickly look and see this Russia-Ukraine conflict, if and how it would affect what's going on in commercial real estate markets. The only thing I saw basically was from, one of the things I saw was from this article from PropMoto. And they're saying that basically their analysts say that the impact in the commercial real estate markets will be negligible. And of course, it's less than a week old, so it's way too early to tell. Who knows? But this particular article pointed to the fact that it's more so the indirect impacts on commercial real estate, like in relation to commodity prices, inflation, et cetera, that are most likely to have an impact on commercial real estate markets. But the conflict in and of itself should not affect the markets. And again, way too early to tell. That's just one article, one source. But we're obviously aware of the inflationary issues that have kind of affected the commercial real estate market here in the last year or so, year and a half. Okay, with that, we basically divided this presentation into a high-level overview of 3 areas of the commercial real estate market that I think most of us are involved in most frequently. And that would be the office market, the retail market, and the industrial market. So we'll give you some high level on those 3. Obviously, there are other areas. As you know, Caryn does a lot of work with hospitality. We didn't really touch on that, as well as multifamily. These are the 3 sectors that I think are most impacted through COVID in terms of changes over the last couple of years.
Mm-hmm.
So let us look at the office market. So this slide is extremely interesting. If you look here, the section that's circled, this basically shows you within the office market, net absorption, net deliveries, and vacancy rate. What's interesting here is that you can see, no surprise, net absorption, which is the difference between new spaces that were taken and spaces that were given back. And you can see 2020, all of a sudden you see a lot of net absorption or a lot of spaces that are being turned back to the owners during COVID. And I should mention, this is a national statistic. We'll get to a little bit more of the Philadelphia metro market, but that's kind of interesting, not a surprise. And you can see the spike corresponding to right where we are now in 2022 with the vacancy rate. So we've got a rising vacancy rate. And if you take a look, interestingly enough, right where we are now is just about where we were in 2009. And for those of us that were around at that time, we remember 2008, we remember 2009, and different set of circumstances, but very similar curve. In terms of the absorption, much more dramatic this time, obviously, because of the shutdowns, et cetera. It wasn't just economic, there were other factors, but it's very interesting how the curve starts to mimic the last recession. So, and I think we've seen that, both Caryn and I, with regards to what's happening in the office market. So as far as the forecast, looking forward, just move this slide here. Basically, and again, this is a national forecast, or I'm sorry, national office market statistics. They're basically predicting that all the way through 2026, the office market vacancy should exceed 10%, 11%, 12%, which is, I mean, that's a pretty good amount of vacancy in an office market. And this is across the board. So if we look at this slide here, give me a second here, I'm just trying to track. So this is what they're saying with regards to the Class A market. Now, when you talk about Class A office versus Class B and Class C, typically a different clientele. Obviously, you're going to have larger companies, more stable companies, companies that hopefully have more liquidity. So you shouldn't see change as quickly. We saw this during COVID. Some of the landlords that we represent, it was funny, like the large companies that were the tenants, we got some calls from their attorneys saying, hey, COVID hit, we're only going to pay 30% of rent here going forward. And what a lot of landlords did is they said, well, okay, can you demonstrate your hardship? And if there is a hardship that you can demonstrate, then we'll see what we can do about the rent. And interestingly enough, in a lot of the cases, the companies elected not to show the hardship, and they just kept paying the rent. So that kind of speaks to what you see going back through 2020 till now, and then going forward. The only other thing of note on this slide is that typically vacancy in Class A markets rides lower than B and C, and that's what economists are predicting going forward. And this is Class A, B, and C. So the 1 and 2 star is really Class A. Class 3, I'm sorry, 3 star is kind of a Class B, C, and 4 and 5 is kind of a Class C, D in terms of office space. So correspondingly, you can see where the economists are predicting vacancy rates will sit as we go forward. And by the way, just take a note of Class C and in particular Class C office, 4 or 5 star office. That is a lot of vacancy. When you talk about 15, 16% or more of vacancy, that's a lot. And it kind of speaks to the fact that it will no longer be a passive exercise for landlords. If you've got a Class C office and you see this trend, and this is what the economists are predicting, you've got to make some changes if you are hoping to attract and retain tenants. And I don't want to get off track here, but one thing that we've been preaching for the last several years is that the office market has changed dramatically. 30 years ago was the place that you went to go to work. You had the executive offices on the perimeter, the big corner window offices. Now, most new builds, you'll see the executive offices on the inside of the spaces, and you'll see bullpens for the younger, newer employees around the window lines, and they want all the amenities. There's Lower Makefield Corporate Center, for those of you who are familiar, that sold late 2019, I believe, in the mid 80s millions for the campuses there. And the new owner put in a lot of capital into various renovations, cafes, et cetera. And most importantly, there's a beautiful new bocce ball court, which, they're not cheap to put in. And I kind of looked at it and said, that's interesting. But that speaks to the market. I mean, if you're competing for tenants, you've got to provide the amenities that they're looking for. So this slide, just wanted to show you in terms of net deliveries or the amount of office space being taken in the markets where Philadelphia metropolitan market sits in regards to the rest of the country. And, so we have less than, and this is in millions of square feet, by the way. So about 600,000 square feet of net absorptions. And I just found this interesting because if you look at this market compared to, let's say, a Charlotte or an Austin, I mean, it's a dramatic difference in the same period of time on the amount of square footage being absorbed in the market, in the office market. And there are reasons for it that we can get into, but most office markets that are expanding rapidly, it's tied to some kind of industry. For example, up in, let's see, Boston is on this, where they're on the list. But a lot of the New England states are now huge with life sciences, for example. So that is a huge trend with groups that are taking and reusing office space and converting office spaces that are appropriate for life sciences. So here's the summary of the office market here. The big obvious stat here to take a look at is the net absorption. So we lost about 1.9 million square feet in terms of net absorption in our market. But interestingly enough, rent growth is at 1.3%. So still seeing some rent growth, which is interesting. And as far as office sales, average cap rate of 8%, average vacancy of just shy of 10%, which is interesting to note. I find stats like this useful for just a quick, dirty, if you see an investment property in the market, to kind of get a sense as to where it stands in comparison to whatever you may be looking at that moment in time. And that's the office summary. So before we jump over to retail, any questions, or Caryn, anything to add? Or I can't see the hand raising box. So if there's any questions,
Yeah, I can't either. I don't know if anyone's raised their hand. Yeah, no, I think it's really interesting, actually, especially with Philadelphia too, because I know that right now I'm showing a decent amount of commercial space for rent in Philadelphia.
Yep, no, I agree. And like you saw from a couple slides, I don't think the real change, aside from the initial part of COVID, has happened yet. So
right,
we still got some change to come. I always say that commercial real estate is not a Porsche, it's a yacht. So, the changes don't happen quickly. They can't happen quickly. Most leases for commercial office space, across the board commercial space, they're 3 to 5 years long. So it's not like, you have a bump in the road and, 6 months from now your term runs out and you can just vacate the space. There's a lot to figure out. The cost of getting into it is extreme. A lot of times paid for by landlords. So there's a lot to talk about. If you need to end the term early and the landlord spent, a few $100,000 building out the space, counting on the fact that they're going to amortize it over the term of the lease, well, there's a lot to figure out before a change can be made.
We do not have any questions at this point. There's no hands raised and nothing in the chat. So a reminder, if you do have a question, you can put it in the chat or raise your hand virtually, or even just raise your hand and I'll let them know. Thanks.
Thanks, Lisa. Okay, so let's jump into retail. The interesting thing about retail, I probably get more questions about retail than any other sector of the commercial real estate market. Full disclosure, I'm not really a retail specialist. We do some retail, but it's not necessarily the core of what we do. But everybody's always saying, what's happening with the Oxford Valley Mall in particular? All this retail space, is retail finished? So we'll take a quick look here. So this is a look at the net absorption for retail, similar to the slide that we looked at for office. And you can see in 2020, a spike in the vacancy rate. And you'll notice that it's a little sharper than the spike that we saw for the office market. And for obvious reasons, right? When offices were shut down, many office landlords or tenants continued to pay rent. And the people that occupy the offices went home and used this wonderful technology that we're using right now to transition the office work home. Not so much in retail. So when they were shut down, and you can see the spike in particular. Look at right at the beginning of 2020. You can see where it was a pretty sharp and rapid peak. And one good example of this, we have a client that owns a shopping center, and they put in a new pretty substantial gym, and their grand opening was March, I believe, 11th of 2020. Worst timing that you could imagine for opening a gym. They have since closed. They wrote it out all the way through COVID. About 3 months ago, they finally had to call it quits. They just could not get the traction following COVID. So also interesting to note. So I'm looking particularly at the vacancy, which is the green stripe there. Now, take a look at how you've got that massive spike, and then look what they're kind of predicting for 2023 and 2024 in terms of vacancy, and then look back at 2018. So you can see it's not really particularly, and this is a national slide, and this is retail across the board, including all asset classes, but it's not really if you just looked at this blindly, you would not say, hey, what's going on with retail, or is retail in trouble? You would look and say, well, okay, it looks like, you know, we had some issues in 2020, but going forward, the outlook is pretty good. Also, take a look at the net absorption versus net deliveries. There's a lot of new leases happening, and COVID. Again, this is a national, so I don't want to broad brush necessarily everything across the board in this market, but I wouldn't look at this necessarily and feel like, you know, the future of retail is in trouble by any stretch. So here's this is some data I got from CoStar, just as far as their outlook for 2022. And they're saying that basically, you know, year over year growth is running at 1.9% as opposed to 2.4%, which is the 5-year average looking backwards. And that last sentence that we underlined there, they're saying that basically the downside is tied, any particular downside going forward is tied to competition from e-commerce, which we know. We'll talk about that in the industrial segment a little bit more. So this shows rent growth in the retail market. And you can kind of see just before COVID when we were really moving and kind of a scattergram here, but you can see across the board pretty significant jumps in retail rent. And again, national and all different types of retail. So I thought this was interesting as well. This is market cap rates for retail properties, both looking backwards and then forecasting going forward. As a reminder, as cap rates rise, values of property fall. And again, this is all asset classes within the retail sector. But kind of interesting to see that they're predicting, and again, this is CoStar data, but they're kind of predicting that cap rates should gradually start to rise, which means that value should start to decline. Some of this is tied to the planned increases in interest rates. I mean, the Fed has said at least we should expect at least 3 at this point this year. And you know, the way that it works is as money becomes more expensive, your loan payment for the property becomes more, and so that adversely affects the value of real estate. So I guess part of their prediction is just tied to cost of funds going forward. And this is a basic retail summary. Some leasing data is there. So positive net absorption, which is good. And similarly, rent growth. And these are both Philadelphia market stats, Philadelphia metro market stats. And average cap rate across the board in retail, 6.9%. And less vacancy, as you can see, than office at the time of sale. Office was a little more than 9, and retail on average 6.4%. So looking at this, you're comparing this to office, the office summary slide. You'd probably make the argument that retail's probably in some ways the better investment on day one between the two, but you know, that's only one way to look at it. I think there are many ways to look at it, and that investors do look at it when making their decisions. All right, if there are no questions or comments there, and I can't see again the comments, so we'll jump into the industrial, which I think is the most interesting of what we have to talk about today. So this particular slide looks at the difference between demand and net absorption. So the amount of demand, and this is specific to our markets here, Philadelphia Metro, and the amount of absorption space is being taken. And you can see that there's far more demand than the properties that are that are being leased. And that speaks to the fact that, there are fewer opportunities that are available to address the demand in the marketplace. And of course, we all know the supply and demand curve, and that just leads to rising rents. And in this case, rapidly rising rents. So as far as the industrial demand curve, a couple of things just to take a quick look at. Overall activity is up. E-commerce activity is up. Manufacturing activity is up. Distribution demand and activity is up. And inventory to sales ratio is up. So when you see everything pointing up, probably good market, just as a general rule of thumb. Excuse me one second. As far as stages of demand, also, this is interesting because you can tell that the majority of the demand, 52%, is in the initial survey stage. So that basically looks like, think of it like a floodgate, people flooding into the market. When you have that many people, I think I'm not as familiar with the residential trends, but it kind of sounds like what I hear on that side, where you've got all of these buyers looking, and then by the time the listing pops on the market, you've got 100 buyers making an appointment to see it the first day, making offers, no inspections, above asking price. It's kind of a similar trend, but this is a very abnormal trend within commercial markets historically, especially industrial. This is an interesting slide because, and we'll talk about this more, but we touched on it in retail. This looks at e-commerce as a percentage of total retail sales. So look at what they're predicting going forward. Let's see, in 2020, it was about 15% of all retail sales were e-commerce. Depending on if you're bullish or bearish on this, I mean, it might be as high by 2025 as 30%. So imagine that, 30% of all retail sales being delivered through an e-commerce channel. If you asked our kids, they may not think that's a big deal. Of course, we buy on Amazon, it's going to be delivered to us, within 24 hours. But when you put this against the commercial real estate landscape and the real fixed assets that you see every day, imagine if 30% of the sales is just taken and transferred to a means that doesn't require, any retail presence at all. So that has the potential to have dramatic effects on both the industrial market and the retail market. So in the industrial market, if these e-commerce delivery channels really spike to 30% of all retail sales like they're predicting, well, you need more warehouse space. You need a place to put all this stuff, especially the last mile industrial, to deliver from the ports to from there to your home. On the converse side, and I went into, as a slight aside, I went into the mall this past Christmas for the first time in, I don't know the last time I was in a mall, especially not the Oxford Valley Mall. And I have to tell you, it was almost depressing in a way, because there were massive big box stores that just had massive amounts of unused space, just completely unused space. And that, my mind, when I see that, goes right back to this slide that tells me, well, okay, they don't need the space. The space that they once used in the stores is now in a warehouse somewhere, and they're being bypassed completely. And again, commercial real estate being, a yacht, not a Porsche, you're just watching the slow cycle of the transition from these big box retailers to the warehouse. And, that's going to continue, obviously. And it's kind of amazing to see, but that transition has to happen, and it's all going to come down and play out in the economics of sale prices and rental prices of industrial and retail real estate, among others as well. So this looks at industrial supply. And as you can see, the gap between the vacancy and availability is pretty, it's very interesting. It shows you that there's a tightening of the market, more demand than supply. And if you look at on the right-hand side of the slide, vacancy is down to only 4.39%, 8 million square feet of net absorption. This data was from the third quarter of last year, by the way. And you put all these factors together, and again, it's a supply and demand factor at work that gives landlords tremendous power with regards to not only how they price their available space, but also which deal they take. You can hold out now because of the demand for a stronger tenant. You can hold out for a tenant that doesn't need landlord improvements. It's just, it's pretty dynamic to see. I remember years back touring industrial spaces that, they were calling and begging us, what do we need to do? Well, we'll give you $1 per square foot bonus. We'll give you all kinds of months of free rent. Now it's like, I called on one this week that just came on the market. Within 4 days, I called with 3 different clients to show it to, it was already gone. So here's another very interesting slide. I'd say the big takeaway on this slide is the lower right-hand side. 64% of all new industrial real estate construction is being built on spec, meaning that they don't have a tenant in mind when they start construction. They're just building it, and eventually, build it and they will come. What's interesting about this is that if you look at how this works, imagine going into a bank and saying, hey, I need to borrow $20 million. I'm going to build an industrial facility. And the bank says, oh, okay, who's your tenant? I don't know. Okay, well, here's your $20 million. Well, that's essentially what's going on, because banks are obviously recognizing, not just banks, I mean, any funding source, they're recognizing that the demand is such, it almost doesn't matter if you have a tenant or not, because the demand is still going to be there when you deliver the space to the market. And the rents will be probably higher than they would be even today. Okay, so this is an interesting one also. Between September of 2020, which mid-COVID, and August of 2021, the PPI index for construction materials increased by an average of 27.91%. And I think we all felt that. I mean, we're all aware of what was happening in construction and materials. We can all kind of feel it in our pocketbooks today, some of the inflationary effects, et cetera. This next slide kind of breaks it down. So, and again, this is an average over that time period. But structural steel was up by 28.76%. Plywood was up by almost 50%. Paint, who thinks about paint, but when you're painting, I mean, if, you have somebody coming in to, purchase or lease rather a new office, you've got to paint it. And you know what it typically costs, and paint in that time period was up by almost 15%, and precast concrete up as well, almost 10%. So as far as development goes, industrial development goes, commodity costs are up, lead times are up, time to deliver is up, and pricing commitment is down. And the pricing commitment is basically, you may call a vendor or a contractor and say, okay, this is what I want to do. How much is it going to cost? They'll give you a price, but that price will be good for a very short amount of time. There's no 30-day or 60-day guarantee that, when you're ready to start your project, this is what it's going to cost, which creates significant challenges when it comes to development. Think about the fact, with construction and development, everybody doesn't just roll in on the same day. So you've got, different contractors showing up at different times to do their part. And with some of the delays and changes in pricing, the whole project has the potential to come off track. Okay, and then the other thing that's happening here, when demand starts to exceed supply, typically what happens is market expansions. You start to say, okay, well, where else can we go to find something? And obviously it drives demand on land and development, demand for properties that are zoned industrially. As another aside, one crazy thing that we're seeing tied to this is there is a massive demand for land that is zoned for truck parking. You've got all these people with trucks that are supplying these warehouses. And I remember, if you've got 30% of the total retail sales going to e-commerce channels, not only do you need more space to house those goods, you need trucks to deliver those goods. And I mean, I can't believe the number of calls. We get more calls every week for truck parking than anything else. It's unbelievable. And expanding markets. Years ago, we got calls like this. They wanted to be right next to the 95 on ramp in this town. Now it's like anything you have anywhere, we'll take it, almost at any price. So quick summary, all of these factors pulled together, land costs are going up, inventory is going down. Timelines for getting permits is going up. And that's interesting too, because for many months in some municipalities still, there are fewer meetings via Zoom. It's just harder. Some things are harder to get done by Zoom. I think zoning is one of them. I mean, it sounds silly, but it should be the same thing, but it's not. And, I won't expound on that forever, but I mean, permitting things that took maybe 3 to 6 months before are taking 6 to 9 months to a year now. And also just of note, parking requirements are up in this next slide. Can you see the slide fairly clearly?
Yes.
I know it's not the clear side of my end, but if you take a look, I wish I could zoom into it. This is just a spec, an illustrative industrial concept plan, we'll say. If you look at this plan and looked at a plan from, 15 years ago, 20 years ago, one thing should jump out at you as being odd compared to a plan then. So of course you had, limited amount of office, and you had the delivery stations, etc. But look at all the van parking. I mean, the trend now is less building area and more parking area specifically for vans, which is just shocking. I mean, you think about the value of ground, and it used to be all about, maximum, building coverage ability. How much building can you fit on the land? Now it's how many vans can you fit on the land, which is interesting to see. I'll throw this out there without an address just to put some perspective on it. We had an Amazon logistics driver recently sign a lease that we're just leasing land to park Amazon vans. I want to say the land was roughly 1.5 acres or so, and they were paying in the neighborhood of $120,000 a year, triple net. So they're paying all the expenses and taxes, etc. And that was a starting, and it was going up by a pretty considerable amount every year. But can you picture for just a little more than 1 acre, paying $100,000 a year just to park vans? But that's the shift in the marketplace. So a couple of external factors, extreme weather events, which have been ongoing in virtually all markets. I have in the tornado of last year, I have a very, very dry basement, never have an issue with water. That tornado last year, I got water somehow in the middle of my basement. I still haven't figured out where it came from. I was talking to an insurance executive with a major company, and they were talking about their claims and everything going on due to extreme weather events, and it's a significant uptick. Obviously, COVID is an external factor. We talked about retail shifting to e-commerce, trade restrictions, anti-warehouse legislation. So some of these companies are having to fight to get properties that are zoned to entitlements to build warehouse spaces. Let's see here. Obviously, rapidly escalating cost. Local politics, as we know, cost of capital rates, as I said, will rise this year at least 3 times. And this last bullet point we just added a day or two ago, these wars and sanctions, and we'll see what happens. But I don't think anybody can deny that we're officially and effectively in a global economy, and what happens on the other side of the globe ultimately will affect us here locally. So despite the article that we opened up with, I think we'll likely see some of these factors starting to gradually affect the commercial real estate markets. So as far as the forecast for industrial, I think we can expect that rents will continue to increase. I think based on the e-commerce slide, we would expect that demand will remain high as the demand shifts to e-commerce. There'll continue to be work workforce challenges, which should put upward pressure on wages. I was sharing with Lisa, we were speaking earlier today. The workforce challenges are across the board in every sector, industrial, retail, everywhere. And we were working an office lease, and we were at the 11th hour. The lease was out for signature by all parties, and all of a sudden the CEO calls us and says, "Hey, I can't sign this lease." And we say, "Hey, well, why? It's basically done. What's the issue?" And they said, "Well, our workers came in. They said, hey, we don't want to come back into the office, and if we sign this lease, you're probably going to put pressure on us to come back, and we're going to leave." And the workforce is such that they can't take the risk. So they're not signing this new lease. They're going to let their employees work from home. So those challenges are everywhere. The Starbucks in Newtown, half the time, does not take mobile orders because they don't have the workforce to support that side of their business. And for those of you that don't know, there are very few things I'll wait in line for, and Starbucks is not one of them.
One of them.
Let's see here, and we also expect growth to continue in the manufacturing sector, which obviously is going to support continued demand on warehouse spaces, et cetera. And that is our high-level summary of the three sectors, and we'll turn it back over to Lisa for any questions.
There are none in the chat, and I don't see anybody's hand raised. So I don't know if you're finished, or Caryn, if you're going to be commenting as well.
Well, I wanted to maybe so Chichi could give, everyone who's listening, because a lot of people don't realize, when he was talking about industrial space for Campbell's Soup and Home Depot is a warehouse that's 1 million square feet. So now, they're talking about having more trucks, and when they're talking about the cost of paint going up, and they have to get 1 million square feet painted. So it's interesting, I don't know if everyone really realized how much industrial space can actually be, but 1 million square feet for warehouses like that is normal. And then the hospitality business, as we've all seen, restaurants, ones that unfortunately opened and then, had the bad timing of opening before COVID. And they shut down too. The cost of food was, wings, I think, went up something like 60-something% was the cost of just to buy wings. So, I've seen some of my clients now that are big wedding hospitality that had restaurants, they're not reopening their restaurant because their profit margin just doing events. So this is kind of another thing that's happening as well, is opening, events, their now profits are up 57% by not having a restaurant. So it's interesting what's actually happening in that end of commercial as well, because there's restaurants now that I can't sell.
Yeah, Caryn and I, we were talking a little bit about that during COVID.
Right.
And I found that interesting just because when you think about it, and I talked to you about a couple of your clients, but when you talk about a restaurant, right, it's got, in addition to all the other things we talked about, they've got the workforce issues, they've got all the other pressures, but it's also a special use property. So it's kind of like limits your options to exit, because the highest and best purchaser is probably another restaurant, but the industry is suffering from the same set of issues. So who do you sell to?
I know. And then, of course, depending on the town, we're full of river towns here. And it's not like they're going to want the Logan Inn, for example, to be torn down and, 50 apartments built. So that's the struggle there as well. And getting help, and people not working, and you just can't get people in, and people in fear of COVID. They don't want to, they don't want to get sick. So, I know some of my clients, they're the owners, and they're actually serving food and clearing tables.
We do have a question from somebody, from Satish. Our township, Are townships cooperating to approve permits with changing industrial markets?
I'm sorry, Lisa, I lost the last part of the question.
Are townships cooperating to approve permits with changing industrial markets?
I mean, Caryn, I'd be interested in your answer as well. I mean, my answer would be, it depends on the township first. It depends on the property second. You know, let's face it, would you rather see a beautiful home or a beautiful, you know, resort type property, or would you rather see a big block building in your backyard? So townships, I will say, it's a catch-22. I've seen some, like in Fairless Hills, Pennsylvania, the old steel mill that was sold to North Point Development. You know, they're going to develop 1 million square feet of industrial. There's certainly an economic impact at scale that comes into play, but on smaller scale projects, I mean, it's going to come down to where the project is. I've got one that's directly across the street from a local municipality office. I won't say which township, but I've been in there many times meeting with them, and certain uses just won't be approved because of where the property is. So yeah, it would depend on the property and the municipality.
Yeah, and that's true too, because then they have to, you know, you can't just change one tax parcel's zoning. It has to be for everything around. So, and then, you know, everyone fights it. It's a challenge, I think, all around.
I'll tell you one quick, somewhat interesting story. We sold a property recently. Again, I won't mention any names or towns, but it was a special use property, substantial acreage, and it was sold for a medicinal marijuana growing facility. And it wasn't in Pennsylvania, it was in another adjacent state. But I'll tell you, it's an emerging use. And I was at the property quite a bit. And every time I was there, you know, one day I was there to get the power turned back onto the property. And the buyer was there and he said, "Oh, the trucks will be here in about 30 seconds. I said, "Oh, okay." 30 seconds later, you see these huge power trucks rolling in, like 10 of them in succession. I said, "Well, how did you know that?" He said, "Oh, the mayor texted me and said that they'll be here in 30 seconds. And every time I was there, the mayor was kind of around in some form or fashion. What I later learned is that this one operation, this one location, was going to provide 3.5 times the annual budget for that town, the revenue from this one location. So, you know, that's going back to my earlier point of all the pieces have to align, but when there's that kind of potential additional revenue at stake, that could be a motivating factor for the town's approval as well.
Okay, I don't see any other questions. And just as a reminder, and I'm not sure if I said this earlier, but this is being recorded and it will be sent to all members early next week, along with the presentation slides. And if Caryn and Chichi, do you have any further comments?
I think that for our next, whenever we do it, you know, the next call or Zoom that we do, maybe people could actually send in questions or, you know, things that they'd like us to address. It's a little different doing it in a Zoom than when Chichi and I were in a room speaking and there are hands going up and we're bouncing ideas off of one another. It's a little different doing it this way in a Zoom. So maybe if people felt comfortable enough to write in, we could then gather those questions and we could maybe have a different format even.
Sure. A lot of what some committees are doing for their, you know, quarterly meetings, usually committees meet quarterly. Sometimes they meet a little more, a little less. They are right now, we're doing a lot of Zoom committee meetings, but I think we have something scheduled in September for a commercial deal exchange program.
Yes.
Actually, another question just popped up, if that's okay, guys. What advice would you give a new agent looking to get started in commercial real estate?
New agent, or new agent, just solely for commercial?
I don't know. Philip, you can unmute yourself if you don't mind. And
Yeah, I'm a new agent. I'm a completely new agent in real estate. I come from a mortgage background in the previous 4 years, but I recently just got licensed last year.
I'll leave that answer to Chichi.
Run as fast as you can. Stock up on blood pressure medication. Prepare to age faster than you ever planned. No, seriously though, I guess the biggest advice I give to new to the business people in commercial real estate is probably the biggest difference between the two sides of the business. We operate on an extremely long sales cycle by comparison. So first thing I say is make sure that you've got capital reserved to give yourself the time to get a business going. That can take probably 2 to 3 years, honestly, before it starts to build. And when it builds well, but it takes time. And so a lot of times what happens is people get into the business and they'll even get some traction, but you run kind of out of funds or low on funds and you're forced to go get another job before you can give yourself the chance to make it. So that's the biggest probably piece of advice I can give.
Yeah, and we're in a different market now too. I think when, even us in residential have, I always say to people, well, let's see if you can make it when we have a normal market. House is going up. You got 5 offers here on this house, 30 offers on that one. It's kind of the same what you were talking about with space. So now it's, just really have to go for it and just really, but like Chichi said, make sure you have some reserves.
I'll give you one more piece of advice that I learned a little later than I would have liked to. Definitely specialize. In commercial real estate, you cannot be all things to all people. Each area requires a certain amount of expertise. And initially, it's a long sales cycle. So it's like, I'll take anything I can get, chase any lead I can find. But you'll learn quickly, you cannot be good at all aspects of the business. I say if you're in a city or an urban environment, pick one specialty and one specialty only, become an expert at that. Suburban markets, you can get away with maybe a little bit more specialty, but being all things to all people, you won't get anywhere anytime quickly. And, as I mentioned, we don't do a lot of retail. I do almost no multifamily whatsoever. The vast majority, probably 80% of what we do is tied to office or investment properties, most of which are office centered. So that's another key, I'd say.
we do have another question from Sung. Sung, do you want to just unmute yourself?
Yeah, I was just trying to type it, but so I was on a Jersey call yesterday. I'm on Jersey MPA, and I've done some commercial leases, and I've actually enjoyed it, right? But my question, and it was also a statement, was that when you really think about the commercial role and just like the industry itself, you would think that there would be just a separate license or like a separate certification for it. So my question to him, and it was a little bit broad, was like, how do you effectively learn or gain experience? Like one of the things that someone brought up was sometimes there might be a few specialists within your office. They're both residential, commercial, but I mean, I think that's the practical way, but I feel like what are the other steps in like making those small progressive steps to kind of eventually, taking that leap of faith? And again, it's a broad question, but any insight would be helpful.
Well, maybe I'll touch on that and then Chichi can give his expertise because he does solely commercial. But if you're at a brokerage firm that just that does both commercial and you're not really going to be at a brokerage firm that does residential and industrial, for example.
Okay.
Okay. It's a very, very different animal. You might be at a residential brokerage where they list a little building in Doylestown, or there might be 4 apartments in a building and maybe a retail below, and you kind of get the hand of it, whatever. But when you get into the big commercial, you need lawyers. There's lots of lawyers, and so, if you are with a company maybe, and you're doing both, you want to see what they're going to offer. and then really which direction you want to go in. So if you wanted to do more of the industrial, maybe go speak with an industrial. It's kind of almost the same as when are you going to go to Keller Williams? You're going to go to Remax. You're going to go to Sotheby's. Where are you going to go? You want to go talk to each of those different brokerages and pick what's best for you. And that doesn't mean that 3 years down the road, you're going to say, oh my God, you know what? I don't want to do this. I want to do, industrial leasing. I have friends that do industrial leasing, but like what Chichi was mentioning before, it could take, 2 years or more to close that deal. So the payout might be nice, but what are you doing for the 2 to 3 years before that closes?
Yeah.
So that's where, you really, you have to go somewhere where someone is going to teach you, but you also have to be very open and commercial, that you have to have, if the company you're with, like Chichi's commercial company or any of the really, other big commercial firms, they have team of lawyers there, and friends of mine like Chichi too, I have a referral for him. Chichi's like, just hand it over to me and I'll run with it. That's not what I do, so I know that's just my advice, being on both sides. You really can't do both and be an industrial or big commercial broker like Chichi and also do residential.
Yeah, no, that was helpful. Anything that I'm gaining right now, even the conversations are really helpful to kind of build that longer game for me. So Thank you, Caryn.
Yeah, you're welcome.
Yeah, I would say the two things I'd say is, one, it's easy to forget that realtors are and should be professional practitioners that represent our clients' best interests. And I heard a long time ago somebody say we're the only industry in the world that you can go to school for 3 weeks and then go practice on the public. And I think the first thing is, not looking for opportunities to do a deal or two, but really committing to being an expert that a client can rely on. And that really takes a significant amount of temptation away from getting out there and running with the deal. I can't tell you honestly, I get calls all the time from people that say, oh, I bought this commercial property with my friend who's mostly residential, and they didn't tell me that I need to do an environmental study. And then I came to find out there's a major problem. The DEP wants to take my property away. There are steps that are critical to know that you can only gain, as Caryn said, through experience or having the appropriate professionals involved, attorneys, et cetera. So that's the big key. And secondly, most people don't know, but I started out as a residential real estate agent. That's where I started my career. And I'm a firm believer that, if you want to do something, jump all the way in. So I literally closed up my residential business on a Friday, and I opened up a commercial business on Monday. And of course, I still had, shortly thereafter, just about everybody I knew wanted to either buy or sell a residential property suddenly. But you can only do, in my view at that time, you can only do one if you want to be effective. You have to become an expert at one. And I look back today, and it's odd to say, but I had a client stop into my office recently to ask a question about a residential lease. I've done many, many, many leases in my day. I didn't feel comfortable to answer the questions, honestly, because an expertise is required that I no longer have. So I think the most, I'll put it this way, I think less than gaining experience or skills is just to make a commitment to one side of the practice or the other. Caryn is and we were talking about it last week,
Yep, you're muted, Chichi.
Sorry, am I back?
Yep.
I've got this bizarre cell phone, laptop, Bluetooth setup. So got a phone call. But, Caryn and I were talking about this last week. Caryn Black is not at every agent, where not every agent can be successful on both sides of the business. And, Caryn also self-governs. Like I said, we've passed referrals. Going back to my previous point, committing to get involved where you can be effective for a client that you're representing and represent their best interest. Article 11, I believe, of the Realtor Code of Ethics refers to that. getting involved in areas that you have expertise. So that's the biggest advice I have. I think if you want to go commercial, go commercial, connect with a commercial company, go there. If not, don't dabble. I mean, whatever you can make by doing a deal or two here or there, you can easily lose by, a mistake that you might not have seen coming. Not to scare you, but that's just my honest view on it.
Yeah. No, thank you both. I mean, I'm actually, just so you guys, still converting from full-time work. So this is definitely long game. This is not just like, let me figure out the immediate plan. It's just those conversations and kind of, yeah.
It's
Thank
kind of
you.
like when in residential, when you're, doing it like a deal for the first time and you're not with a company that has someone there with you all the time
Yeah.
to help you. And it's kind of the same thing. Like maybe if someone says, hey, could you list a, 20 unit apartment building that's got a restaurant, 3 more retail spaces. Yep. But you're going to either share it with somebody who only does commercial in your company, or maybe that's the time you would say to someone like Chichi or, hey, I want to refer this to you, but I really want, to be involved in it because I want to learn, because it's better. It's just like in residential. Like if you're not familiar with septic systems, aquifers on properties, creeks, what can't be done, if you, depending on which, terrain you're in, like where I am all along the river, just because you're on 10 acres doesn't mean you can build a pool. All depends on the land, right? So it's the same thing in commercial. It's better just having somebody always there that can actually teach you. And then you kind of just slowly get into it.
Yeah. Thanks, guys.
All right, well, it's after 1, so just wanted to thank Chichi and Caryn for taking the time today, and wanted to thank everyone who participated. You will get this, again, you'll get this probably Monday or Tuesday. And, if you have any questions, send them my way or send them to Chichi or Caryn, or topics you might be interested in on the commercial side. As I mentioned, we are doing something in September. I don't recall if we have a date yet, but it's going to be a commercial deal exchange. So that will be an event that we'll have via Zoom. But yeah, please forward any interest that you may have so we can, address them. And thanks everyone, and have a great day.
Thanks to Chichi for really doing all of this.
Thanks Chichi. Thanks, Caryn.
Team effort.
All right. Thanks, guys.
Enjoy, Chichi.
Thanks, everybody. Good to see you all.
Bye-bye.